In today's video, I'll be discussing why Bitcoin can reach $1 million per coin by 2030. Cathie Wood, that manages one of the most respectable hedge funds, believe that this will happen. Billionaire co-founder of PayPal, Peter Thiel, agrees with her. There are so many other billionaires like Elon Musk, Jack Dorsey, Mike Novogratz, Winklevoss twins who found this believable. Let me share with you some facts and data and statistics that supports this theory, because the idea of the $1 million Bitcoin is based on another idea, which is scarcity. Now there's only ever supposed to be 21 million Bitcoins in all of existence, but it will take another 118 years before we mine all the Bitcoins. And before all 21 million actually exist, that will take us to the year of 2140. As of today, over 90% of the Bitcoin's entire supply already exists. It will take us over a century to get access to just another 10%. But here's what crazier: if all the world's millionaires decided to buy just one Bitcoin, they wouldn't be able to, because there's not enough. There are roughly 56 million millionaires around the world, which would mean each millionaire would only be able to buy a little over a third of Bitcoin, which is technically wrong, because as of today, there are more millionaires, and more importantly, roughly 20% of the Bitcoin's entire supply has been lost forever. Something like 4 million Bitcoins will never be recovered, which means the real supply of Bitcoin is closer to 17 million, which makes it more scarcier as you think. Let's get started with these facts and data points that support this theory of $1 million Bitcoin by 2030. So right now Bitcoin is worth about $20,000 and its market cap is somewhat around $400 billion. Here's what's going to take us to get to $1 million Bitcoin. We would need to make 50 times our current market capital. At that point would be worth much closer to $20 trillion, which is insane amount of money. Just for reference, here's what $1 billion in cash looks like next to a couch and a group of people. That's a lot of money. But it's not $1 trillion. Here is what $1 trillion would look like next to the White House and a football field. It's pretty accurate representation of how much Bitcoin is worth today, rounding up to the fact when Bitcoin reached to its all-time high of 69,000 and was worth over $1 trillion asset. And that is not even $20 trillion. And accidentally, here's what the $20 trillion would look like next to the Statue of Liberty and skyscrapers full of money. This seems impossible in 8 short years. But let me show you how it can actually happen. The first thing we have to talk about is how much money it actually takes to move the price of Bitcoin. Because the idea of $1 million Bitcoin is flawed if we are talking or looking it through the lens of market cap only, like I used to. And I know so many people do, because even though market cap is supposed to tell us how much money is in the entire system, it doesn't. And it's kind of confusing. All a market cap does is it takes the current supply of something and multiplies it by the current price, which is the last known sale price or the trade price as we know. That's all it does. For example, right now Bitcoin's market cap is roughly $400 billion. So it doesn't mean though that $400 billion worth of money is inside Bitcoin ecosystem. And if Bitcoin goes to zero tomorrow, doesn't mean that the investors will lose $400 billion worth of value. All it's doing is taking the Bitcoin's current price of 20,000 and multiplying it by the current supply of outstanding, which is 19 million coins, to get the implied value of $400 billion. The implication though is that if we were to sell all 19 million at 20,000, you would get $400 billion, which wouldn't, because if you were to sell all of them, it would affect the price all the way down. That's why Bitcoin's value is not its price. Also, neither is its market capital. Market cap is a perfect example of is the stock market. Let's look at Apple's stock market. Right now it is at $2.78 trillion, and the way this number generated is taking all the stocks that are available in total, multiplying by the current price of Apple to get to $2.78 trillion. But it definitely doesn't mean that Apple have $2.78 trillion worth of stuff. There's also the price to earnings ratio, right, which applies that Apple right now is worth over 28 times, which means the investors are paying over 28 times the price of what it's earning for a year. And that is what we get the idea of opportunity of investing in Apple, because people expect Apple to grow and make more money in future. It's crazy misleading how it works. You can technically start a $1 billion company with just $1. It takes you to create a company with 1 billion shares and sell each share for $1, and that would give you the implied value of a $1 billion company. Now Bitcoin doesn't have a PE ratio because it's not a stock, it's not a company. But the logic is very close, and you don't need as much money as you think to move its price. And the best evidence of this was on December 20, 2020. It all started with Tesla bought $1.5 billion worth of Bitcoin. This was on December, that's when the price started to skyrocket. It more than doubled, nearly $800 billion market cap in a span of over little a month. So do you think people really spent $400 billion on Bitcoin to double its price? There's no way that happened. The real dollar amount was much lower as you think. And to figure it out would be impossible without knowing each and every single transaction, but theoretically it would be as less as 10 to 20% of its market cap, which means instead of needing $20 trillion, we might need only $2 to $4 trillion inflows to make $1 million Bitcoin possible. There are some catalysts that might make it happen, but please keep in mind that some of these are completely subjective, but they are relative conservative in relation to what they are. But within the next 8 years, Bitcoin will either completely disrupt or play a conservative role. The price action of Bitcoin moves within cycles. At the beginning, its price was fraction of a dollar. Also remember the fact that a man traded 10,000 Bitcoins for 2 pizzas. Isn't that crazy? Would anyone have thought that at that time those pizzas would cost him around $300 billion as of today? Bitcoin is independent of centralized SWIFT system. Russian is an example of company on whom SWIFT ban and sanctions have been imposed. Russian assets worth over $600 billion have been impounded by the West. Here's where I think Bitcoin comes in for settling the trading payments, because Bitcoin can be used as a neutral limited supply asset. It cannot be created from thin air. It's a product of high energy and computational power. Its supply would keep falling after every 4 years in an event called the halving. There are 8 major markets which Bitcoin could be very demanding. The first is the remittance market. This is where we send money from one country to another, like we did to help Ukraine. It is slow and expensive and closed on weekends, and Bitcoin is undeniably a better system as compared to the existing remittance market system. If Bitcoin can even capture 50% of the remittance market, then we would add roughly $300 billion or $14,000 a coin. Number 2 is the big one. This is the emerging market currencies. This is referring to what we call as the M2 supply of money. This is all things like cash, physical coins, checking accounts, accounts in words. Money is easy to convert, and emerging part is referring to the countries that are transitioning from development to modernization. A good example is Chinese RMB, Russian ruble, Brazilian real, Indian rupee, things like that. This is where Bitcoin could be a good proposition for the store of value. Now, if Bitcoin can only capture 10% of the global market, here, this would add additional $2.8 trillion to the market cap of Bitcoin, or roughly $133,000 a coin to the value of Bitcoin, and that is excluding the top 4 countries of the emerging currencies. The third is economic settlement network. This is where banks send money to each other, and all of this happens digitally. But at some point they'll want to settle in a final currency, which is usually the dollar right now. But it doesn't have to be. It could be digital currency like Bitcoin. And if Bitcoin could capture only 25% of this market share, they would additionally add to $3.8 trillion or $180,000 a coin. The fourth market is the national state treasury, and you can think it as the cash reserves of a country, or like it's a little emergency fund, and if Bitcoin can capture just 1% of the global market cap here, that would add another $3.8 trillion or $180,000 a coin. A fifth catalyst is HNI, which is referred as the high net worth individuals. If those people held 5% of their assets in Bitcoin, that would add another $4 trillion to the market cap, or roughly $190,000 a coin. The sixth catalyst is an institutional investments. These are the people like BlackRock. And if only 2.5% of their assets were held in Bitcoin, that would add another $4.1 trillion to the market cap, or roughly $196,000 a coin. The seventh catalyst is corporate treasury bonds. This is where companies raise capital by creating some debt, and if only 5% of their money was held in Bitcoin here, that would add another $4.2 trillion to the market cap, or roughly $200,000 to the value of Bitcoin. Finally, the eighth catalyst would be gold. If Bitcoin could reach at least half of the gold market cap at $5.5 trillion, that would be additional $260,000 to the value of Bitcoin now. Obviously, a lot of this is very subjective and we can play with the math and spin the numbers around however we want, but we could probably both agree that this is relatively conservative and not assuming that Bitcoin is going to take over the world. But altogether, the grand total market cap at this point would be $28.5 trillion, which would imply a Bitcoin price of $1.36 million. Some people say that $28.5 trillion is just impossible because it's too big. But to put that in perspective for you, that is still way less than the global value of equity market, that is the stock market, which is valued at $106 trillion. That would still be much less than the global supply of M2 money, which is $123 trillion. That is still way less than the global value of bond market, which is $124 trillion. And finally, that is still 10 times less than the global value of real estate, which stands at a whopping $220 trillion. So when you put it into perspective, $28.5 trillion doesn't sound that impossible, especially over the span of next 8 years. So the next question would be, would you buy Bitcoin before it hits $1 million? If you see, technically Bitcoin is extremely oversold in weekly and daily time frame, even below 200 weekly moving average. So in my perspective, if you believe Bitcoin will reach $1 million someday, now might be a good time to start dollar cost averaging. By 2030, I don't believe that Bitcoin is going to replace banking, and it's not going to replace the dollar obviously. It will not have to replace gold, and definitely it doesn't have to. All it needs is a little market share from couple of different industries, which is exactly what's happening right now, and that will lead us to the price of Bitcoin to $1 million. Please hit the like and subscribe to the channel if the video was anyhow useful for you. And thank you for watching. Bye bye.